Today we're diving into First Solar, ticker symbol FSLR. First Solar is one of the leading solar companies in the US, but despite their strong position, the stock is down over 50% in the past year. So what's really going on here? Is it just temporary dip, or is it a sign of something deeper? Let's break it all down, and here is the video format. First, I will introduce the company and what they do. Then we'll look at the products they offer and review their financials. After that, I'll cover some recent events that might explain the stock's drop. And finally, we'll dig into their valuation to see if the stock might be a bargain right now. As always, this is not a financial advice. Make sure you do your own research before making any investment decision. First Solar is a US-based solar technology company that has been around since 1999. First Solar makes a special type of solar panels called thin film panels. These are different from the traditional silicon panels you often see on rooftops. Most solar panels use silicon to convert sunlight into electricity, but First Solar uses a different material called cadmium telluride. That's a type of semiconductors that allows their panels to work better in hot weather and low light conditions like cloudy days or early mornings. These panels have a smaller carbon footprint, which means they produce less pollution during manufacturing compared to regular silicon panels. What really sets First Solar apart is that they don't rely on Chinese manufacturing. Most of their production happens in the US, which gives them a strategic edge, especially when it comes to tariffs and US government support. The company's core product is their Series 6 thin film module. The panel is called thin film because the layer that captures sunlight is very thin, much thinner than a human hair. The Series 6 collects sunlight and converts it into usable electricity. These panels are usually installed in large solar farms where they help power homes, businesses, or even entire communities. Now let's talk about how the business is doing financially. In 2024, First Solar brought in $4.2 billion in revenue. That's a solid growth from $3.3 billion the year before and about 27% increase year over year. They reported a gross profit of $1.8 billion, which works out to a 44% gross margin. That means for every dollar they made in sales, they kept 44 cents after covering the cost of making the product. To put that in perspective, many of their competitors don't come close to that. For example, Canadian Solar had a gross margin of about 16%, and the other solar companies often sit somewhere around 20%. Their net income for the year came in at $1.3 billion, which is a huge jump compared to 2022, where they actually reported a net loss. They also have $1.6 billion in cash on hand, giving them plenty of flexibility to invest, expand, and ride out short-term challenges. Now let's talk about how much actual cash they're generating. Cash from operations for the full year of 2024 totaling around $1.2 billion, and that represents a 100% increase compared to last year. So until now, it seems like the business looks solid. But if that's true, why the stock is down more than 50% over the past year? There are a few big reasons, and it seems like most of them have nothing to do with the First Solar, but it doesn't mean the company is out of risk. But let's go over some of the reasons that might cause the stock to drop. First is higher interest rates. When rates rise, financing big solar projects gets more expensive. That slows down demand, even for strong companies. Also, there is the ESG bubble. Investors have pulled billions of ESG funds, and that hits green energy stocks hard, even profitable ones like First Solar. Another reason might be is the Republican win in the US election in 2024. Some investors may worry that there could be less government support for clean energy moving forward. Another reason could be the supply chain delays. First Solar had trouble sourcing key components like transformers and circuit breakers, which has slowed some project timelines. And finally, in late 2024, the company missed analysts' expectations and lowered their full year revenue guidance. That led to several analyst downgrades, and that also contributed to the stock to push lower. Now let's talk about Trump's tariffs for a second. Because most of their panels are made in the US, they're not hit by tariffs on imported solar panels from China or Southeast Asia. In fact, those tariffs make First Solar products more competitive. And when it comes to customers, most of their business is domestic. They've built massive solar farms across the US, including partnerships with companies like Apple and utilities in California. Their focus on the US market gives them stability and makes them a key player in American clean energy. Now let's look at their valuation. As of March 2025, their price to earnings ratio is about 10. That's about 80% lower than its 10-year average price to earnings ratio, which was about 61. That's a big drop and it might signal an opportunity. When it comes to price to sales ratio is about 3, and that's down from a price to sales of 7 that the company had back in 2024. And when it comes to EV to EBITDA, which compares the company's value to its earnings, it's about 11, and that's also down relative to the company's history. Now let's see how First Solar stands against some of their competitors. Over the past 3 years, First Solar had grown revenue of about 17% per year, while Canadian Solar grew their revenue at 10% and SunPower grew at 5%. So it seems like First Solar is a profitable company that is growing and is more efficient than its peers, but there might be other risks. So as of now, I'm going to keep an eye on this stock as it looks very interesting at the moment. If you are new to investing or you just want a second opinion on a stock or opportunity you're looking into, you can book a free 15-minute consultation call with me. I'd be happy to chat and help however I can. Just check the pinned comment below for the link to my calendar. Thank you for watching the video and I will see you in the next one.